So the week may be over here in Europe, markets may be closed, but I think we need to be preparing for the week to come. It's going to be a busy one. Now, one of the reasons for that is that we've got an awful lot of European banks reporting numbers, potentially set to echo the trading results that we've seen from Wall Street. We've got a number of huge names, as you can see. Tuesday, HSBC, UBS, Deutsche and Barclays. Wednesday, I think, will be fascinating. The main event, you could argue, Thursday, with Credit Suisse. We are also going to be seeing the ECB that day. We've got NatWest Friday, the whole host of other banks. We couldn't get onto this graphic. Tom Metcalf joins us now to give us a heads up on what we should be looking for and assessing here. Tom, what are you looking out for next week? What do you think the highlights ultimately are going to look like? Yeah,
well, very busy, and I think you're right to look towards Credit Suisse on Thursday. That is going to be absolutely fascinating. You know, individual case there, but what on earth is they going to decide to do? So we've had news, you know, scoop after scoop coming in the last few weeks, and it should all basically come to a head on Thursday when they're going to come out and say, here's what we're going to think this firm looks like going forward.
A little more on Credit Suisse here, because the reality is scoop after scoop, there's still days away before we see the plans really be announced here. What big things are we looking for even before the plan itself is announced?
Yeah, I think the thing that's really interesting is whether they're going to raise capital, and if so, what kind of form that takes. So there's been some chatter about it might be this convertible bond, which you might remember from the days of the global financial crisis when Buffett took a stake in various banks. And if they do that, that will help sort of defend against the very weak share price. But yeah, it's still not quite clear whether they will do that. They're desperately trying to avoid doing a normal share raise.
Thursday also sees the ECB. And the ECB potentially could be changing the TLTRO rules or the way that it uses this cheap source of financing for the banking sector within the Eurozone. How big an impact could that have? Because net interest income has been huge on Wall Street, likely to be huge in Europe, and the TLTROs are kind of an integral part of that story.
Yeah, no, definitely. It all comes back to the regulators normally, right? And I mean, when I talk to analysts, it's this idea of net interest margin which is really getting them interested, because you'd think, oh, widening net interest margins, that is great news all round for bankers. Actually, because of the economic backdrop, it's coming at a very sort of politically difficult time. And it's perfectly possible that the regulators take a look at this, make some adjustments, or even try and sort of, you know, regulate away or tax away some of those profits.
Tom, I'm really curious about trading results here. Interested in Deutsche Bank, Barclays. Is there any sense of where they might see weakness, given that not all parts of the fixed income story has been good?
Yeah, Wednesday's going to be great. You've got Barclays and Deutsche Bank effectively going head-to-head. I think for both of them, everyone's going to be looking at how their rates traders do. Both are pretty strong in that space. I think where you might see a difference between the two banks is Deutsche Bank's got a bit more kind of exposure to fixed income than Barclays, and that's been a bit weaker. So very curious if any of these European traders can kind of out Wall Street.
Will the UK banks be talking about making the case for or against a windfall tax? How big an issue is that going to be?
It's what they're all talking about. It's what they're all worried about. I think the amusing thing almost is they have really no sense of the direction the government is going to go, right? No one does. You know, it's becoming an increasing concern. I'd say probably the most interesting thought I've heard, though, from a pretty senior banker is, you know what? The thing we want more than anything is stability. If that comes with higher taxes, fine. What we just don't want to see is what we've seen for the past month, where basically, you know, business as normal just can't be taking place.
If they say that a lot of these results cannot be maintained, how much of a drag will that put on a sector that's already trading so far below book value?
Yeah, I think the outlook is going to be crucial. I'm expecting, for example, the UK retail banks to have these huge profits, you know, big margins, but everyone's really going to be looking at what's ahead. You know, the UK economic backdrop is awful, and it just depends whether they say, we're ready for this, we've got enough provisionings, we think our own loan books are going to be okay. Let's say Lloyds or NatWest come out and say, you know, buckle up, this is going to be terrible, we're providing more than ever, and we think it's going to be, you know, multi-year sort of gloom and doom ahead. I think you'll probably see the shares fall whatever they do this quarter.